TikTok.
Oh, I thought you were going to cue up music for us. And we had to dance again.
Listen, man, with TikTok, I could have done a dance or something, right?
Yeah.
You know, like break it out.
We all do the point. Yeah, for this one, point to the bullets that you're going to bring up.
That's
1,
right.
2, 3, 4.
Nick, I don't know. I'm not really on TikTok, buddy. It sounds like maybe I should get on and follow you. You got some skills, right?
I've never used it, but it's
All right, boy. You want to get started?
Let's do it.
Okay. There you go. 1, 2. Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me is Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company, and Clint Sorenson, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Professor Needy is going to Arizona this week for his venture fund get-together, so he could not join us, unfortunately. But we got 3 topics today. We'll talk about Tiger, market down their portfolio, crypto, bank partners are in the news this week, and also TikTok just got destroyed in front of Congress this morning. So naturally, we want to get the group's opinions about that, right? But all right, let's take a look at our first topic for today. We're going to talk about Tiger. All right, so Tiger marked down their venture portfolio by 23% or $23 billion. So Tiger has both hedge funds, right, that also invest into venture, but they also have like venture proper funds too. This mark is specific to their venture funds. This article at the Wall Street Journal also talked about SoftBank marking down 30% on their Vision 2 fund, but they gave a number of different highlights here on different Tiger funds, venture funds, and what's happened with these recent marks, kind of current to prior. So that, you know, PIP Fund 10 looks like it's hanging in there, just down 4%, but the other ones have gotten beaten up pretty bad. The latest one, their PIP 12 was down big, right, 13% from the prior. But they're currently out also raising a fund at $5 billion. So a 30% markdown doesn't stop them, right? But yeah, so let's talk about this, boys. So what do you think? I mean, Nick, I'm actually kind of super interested to hear your opinion. You're like living in this, right, every day.
Right.
These like secondary marks. Do you think this is? I mean, of course, I don't have the names up here, right? The specific names that they own. But in general, what are you thinking about this markdown of 23% in the venture portfolio?
Yeah, I think it makes sense. And then if we also go on, just to give context to the size, raising another $5 billion is still less than half the size of their PIP 15, I think, right? So they're still coming at it, but just a smaller size. I think they'll be able to get that committed, particularly because folks are interested in vintage exposure now too. They're starting to understand that different vintages are really having profoundly different impacts. And that's what the slide you just had pulled up. You could really see a difference between those. But we did our own analysis at 8View, and what we did is we just compared really I think it's the Fund 12, the Fund 14, and then the Fund 15 to what the 8View 50, the index, has done. So the most active 50 names in the market. So it's not a perfect overlap of what we see at Tiger, but with regards to a lot of the names that are known to be held, ByteDance, Carta, quite a few, Databricks, and several others, we were seeing a profound difference between when we would kind of infer start dates. So kind of somewhat relative to the 12, we just kind of threw in the assumed start date of 31 Dec 2020, and we're still up 42%. And that seems to not horribly disalign with what they're looking at. When you look 2 vintages later, with the 2021, and we just compared it to a full year ago, we're actually down 35%. So that's super close to some of the write-downs that we're seeing with that came out in the news. And then more recently, like the most recent vintages, we just compare it to the year to date, which is down only 2%. So I think you see an insane difference across the vintage, and we're seeing the same thing from the 8View 50. So that's the feedback on those.
Okay. So Clint, what do you think? Like, I know there's like preferred shares, right? And then common shares. I mean, naturally Tiger's doing primary market investing, so they're probably getting a lot of these preferred shares. I mean, I was actually expecting this number to be worse, right?
I would have thought the same thing, right?
Do you
Especially based on like
do you think it's the preferred
exposure.
shares?
I mean, it's got to be, right?
Yeah.
Yeah, like it,
Mm.
and they obviously, the bets are spread. It's not a ton of concentration, and everything we've seen in terms of the big slices, names like they own, like Stripe, for instance, down with Stripe down 50%, down about the half, based on
Yeah.
yeah. So you start to
Yeah.
think
I think
about their big
even more.
holdings,
Yeah.
ByteDance, Stripe, right, and you are going to get some. Are they in Klarna? I can't remember if they have some of those other bigger names that have got been cut by 60+%. But if you look at a broader portfolio, diversification in names have obviously supported them. And I think you see that in the 8 view 50, right? When you see that 8 view index, you see that kind of lined up and showing the breadth of those holdings. You see the drawdowns being very similar to a diversified portfolio. So I think it makes plenty of sense.
Right.
Preferred shares that we get a lot of headlines, which also had me anchoring to that number because I'm like, well, they should, a lot of their big holdings I know are down 50%, but then you start to think about how they
Yeah.
spread the bets and position size, and they're professionals, right?
Right.
So they know what they're doing. Then it makes a lot of sense. So yeah, not too bad.
Yeah. Well,
Yeah,
let me ask you
and
this though. Can you guys, one of you guys, explain that preferred shares? Because a lot of folks might not understand kind of liquidation preference and how that works.
Go ahead,
Sure.
Nick.
Yeah, I'll hop into it. Yeah. So effectively, I mean, when you've got the employees of the company, most of them are all going to sit on common shares. So that's pretty much the lowest on the totem pole of who's getting paid out in the event of, let's say, an M&A, a buyout of sorts. But then as each subsequent round occurs, you've got preferred A, preferred B, preferred C. Typically, they could have different naming conventions, but each of those subsequent rounds typically get a higher degree of preference than the prior. So that preference might be whatever the dollar price of the share was for that primary round. They're at least going to get that dollar value back on those shares if any sort of M&A activity happens. In the event of an IPO, most of the time, a lot of these shares are kind of made equal, but other M&A activity, they really will really decrease the value of all the prior preferred shares. So the later you get, it's kind of the last in is the most fortunate for when there is an event of that
All
sort.
right. So if you're out buying right now, ideally you're buying, like if you're going to buy in the secondary, you would want to buy that latest round of preferred shares.
Absolutely. You'd want to grab the latest possible. And we are starting to see a divergence when we get pricing data between the common and preferred a bit more than we would have a year ago when it really didn't matter. I mean, these things were going to IPO. Everybody's getting paid out the same. But now as the valuations come down, you're starting to see that these commons are just going to get what's left over.
Right.
If anything is underwater. And remember, Credit Suisse kind of proved this wrong, but for the most part, debt will get paid first, right? The AT1 bonds are a little different there, but then the most recent preferred, the one before, the one before, the one before. So when you start to get these big drops, you're going to get the prefs paid out at their liquidation preference, the dollar amount of that share, or a multiple of that sometimes in extreme cases.
Yeah.
And then you're going to have different payouts on a class by class basis. It's super interesting. Yeah. Hopefully I did that justice. I don't know.
No, you did.
Yeah,
I think you
that's
did.
great.
Clint's nodding like I did, but
Yeah.
No, but
that's
that
perfect.
the nuance, right? The nuance is important, I think, especially to your point, Nick. Like in these markets where things have come back down, you got to be aware of what you're buying, right?
Correct.
In this space, but Clint, to your point on diversification, like I think everybody kind of generally knows that Tiger had this more of like index type approach to investing in kind of the pre-IPO private markets, right? I mean, so. I'm actually interested to see when some other venture companies are going to start marking down their books, and if it's going to be better or worse. I mean, to your point, this maybe is better than what people were expecting because of that diversification. You think that's generally the idea? Where these other venture companies we're going to see, venture funds will probably see marks perhaps much worse than this,
Especially
because they have
smaller
the
ones, right?
concentration risk.
It also comes down to where they got shares. What's the preference on the shares? So I think if you think about smaller venture funds, smaller late stage funds that are piggybacking on kind of these investments, just hoping to get a pop, you have to think that they're especially if they're concentrated, possibly going to get hit a little harder, depending on their how the chips kind of fell. Right? What names did they chase? Which ones did they get access to? What did they buy? right? Because a lot of those hot names got smoked last year, and that's where
Right.
Right.
you're going to see the pain. But yeah, and I think this adds a lot of credence to, diversification matters. And I think
Yeah.
being able to spread the bets and position size well, taking an index approach to late stage, I mean, it can pay dividends, no pun intended. And so I think that this is just an example, a classic case of that benefit here. It can also hurt, right? Because some of
Right.
those concentrated bets go a
Yeah.
lot more on the flip side. But
Yeah. Power
but
low.
yeah,
Right.
but hey, when risk
Yeah.
happens, we're good.
And I think in this particular case, there is more to it because you know what, when you're comparing it to SoftBank, the portfolio also very index driven. They've got so many names, but SoftBank's is showing a significantly worse performance. But in some way, I kind of think that maybe SoftBank actually has a better grasp of valuation. And what Tiger might be doing is they've got so many names that have now gone public. They have like so many public funds in their hedge fund, right? Or public names in their hedge funds, that if they start to use a public to private comparable approach, now we've already observed that the public markets have overtaken some of the downtrodden events that we've had in the private.
Yeah, sure.
So maybe they're actually taking a correlation approach that's the wrong direction, and they're making themselves look better. So that's part of my fear, because I think they're all savvy, but maybe the SoftBank guys have a longer vision on that. No vision, pun intended.
Yeah.
But yeah, I think it could be more than the diversification, because you're seeing a delta you could drive a bus through between their performance, right?
Yeah. Yeah.
And that is interesting. And then when you think about the boost you got in like the Nasdaq, right? Just think about the Nasdaq this year, right? It's tech heavy. But if you think about the boost you got in the Nasdaq on a year to date basis, right? Marking that now, if they're marking to model, I guess banks can do it, right? If they're marking to model, that might be problematic.
Yeah.
Okay, let's shift gears and talk about crypto, right? So Clint had sent me a text or a tweet, DM'd me a tweet about Kraken, right? Suspending ACH transfers, which is not great, right? Also, the SEC's given a Wells notice to Coinbase for their staking kind of asset listing, right? So they're getting beat up there. And Silvergate and Signature, which were two very big banks, also went down and under receivership with the FDIC. So it kind of begs the questions, like a lot of like negative stuff happening on a macro level, right, for crypto firms. So I'm interested to get the group's thought. This Cointelegraph did highlight that there's a number of banks that are still out there. Some of them are big, like Bank of New York, JP Morgan, Cross River, Axos Bank, right, that are out there that are still servicing crypto shops. So I'm interested to get the group's opinion about, if you think that's going to continue to happen. But Kraken, which is a company that I track, has looked good, man, right? So this is Nick's data here. Like year to date, it's up 10%. It's had $10.8 billion valuation since on its last primary round, and in March of 2003, and then it's 147 million in 2022 revenue. So fellas, what do you think about crypto and banking, right? With Signature and Silvergate going away, do you think that some of these other banks might shy away from working with crypto firms?
I think bigger banks are going to step into it. Bigger institutions and bigger custody arms are going to step into it in a big way, and they're going to dominate. Just like you have two classes of banks now, right? Thanks to Yellen's testimony and what's going on in the marketplace now, you have systemic risk, and you have everybody else. And so I think that everybody else's are going to continue to fall. And if they've been serving crypto, right? That's just, if you just start to think about the regulatory wave that's happening there. And rightfully so, we need regulation. We need it rushed. I get it. I'm not going to point fingers at the regulators for this because we needed it. But you start to think about that coupled with a lot of failures, a lot of classic failures, a lot of counterparty risk. The cream of the crop is going to rise to the top. And I think you're going to have, from a platform perspective, an institutional platform perspective, and custody, you're going to have the bigger players dominate here, in my opinion. So I think it's a huge opportunity for companies like Fidelity Digital Assets, JP Morgan, who called crypto a pet rock, but Goldman Sachs. I think a lot of these bigger names that are adding these Speaking of the pet rock, did y'all see that they like bought nickels that ended up being like rocks or something? Anyway, you gotta look that up. JP Morgan literally did buy pet rocks,
I did.
supposedly.
I did see that.
Yeah,
I did see
but
that.
I saw they
Yeah.
bought Omni. I didn't see the pet rock thing yesterday.
but nevertheless, yeah, these bigger banks, right? I think they're gonna step up to the plate, and I think this is a significant opportunity, right? I don't think the assets are going away. Kraken's up, but if you look at Bitcoin's performance this year, it's top performer commodity we track from a year to date perspective.
Yeah.
I think look, this space is here to stay. It's not going to look the same, and there's going to be purists that want it, off exchange, and they're going to want it, want to hold the keys privately, and there's going to be more institutional players who are going to want institutional quality custody. And I think that
Right.
with what's happened, I think those bigger names are going to step up and dominate that space.
Right. So Nick, do you think that Kraken's kind of held up in the secondary because some of these other crypto exchanges went down, like FTX and a few others, right? I mean, are they kind of like last man standing, so they're getting the love?
Yeah, it's kind of funny. Like first off, with everything Clint said, I couldn't agree more. And there's really not much I would even add onto that. But I think you're actually hitting on the parallel really, really well here. That those that are going to survive the shakeout at the banking level is probably going to be a very similar event to what's going to happen at the crypto exchange level. If you make it through this, and you get through the crypto winter at the other side, the exchanges that have maintained course and been able to persevere, they're going to make out the best. So yeah, I think you're actually almost telling the same story twice for two very different institution types. Yeah.
So Clint, this is like you're like big on the decentralization thing, right?
Mm-hmm.
And how crypto is kind of going to be a driver, a catalyst to get things more decentralized across financial services. I mean, now that we have like these consolidation around these handful of banks, does that hurt? Does it help that?
I mean, look, the process is nonlinear, right? Unfortunately, I wish it was just a straight line of decentralization, but there's always fits and starts. And anytime you get a crisis of confidence, it's just in human nature to kind of go back to a trusted centralized platform and trusted centralized institutions. So I think you're going to get degrees of it, and we've seen that throughout innovation, right? As far as much as we've innovated technologically, we keep going like another level down towards decentralization, towards individual ownership of all content and data, but we're just not there yet from a purist perspective, right? If you think about the metaverse, we talk about this all the time, what metaverses are really dominating? They're centralized metaverses, they're not the decentralized fashion. So I think,
Right.
I think until you start to get, until you start to get a user experience and you start to get less friction in the decentralized use cases, I think it's going to continue to be a nonlinear slow path that direction. And so I think there's always going to be a play for some of these platforms and institutions that operate in a centralized fashion to still build great businesses, because that's what people are
do you think
using.
this is a big do you think this is a big blow to that, well, non-linear but linear trajectory, because you just decrease the number of players, and now the players are bigger and they're going to try to be stickier and make ecosystems, right? JP Morgan doesn't want you to walk away. Bank of New York,
No, they don't.
Yeah. So,
And think about
what's interesting to yeah.
But I was
Go
to say,
ahead.
Nick, I mean, I think you're hitting on an unbelievable point here. Think about this happens through our entire growth cycle as an economy, right? If you think about the growth cycle, you get these rapid growers, they get to a point of critical mass, they start to grow, and they're like, oh no, right? Our growth rate slowed considerably. So what do? They, I would say buy politicians, but in other words, they lobby, right? They lobby for policies, they gobble up the competition, they start to do things that directly interfere with their eventual demise, right? They hold on to the empire as long as possible. It's kind of like the U.S. hold on to the petrodollar for as long as possible through military might. So it's the same thing, no matter if you're looking at a country or a business or an entire industry. These type of things happen, and yes, this is a major setback, and will definitely slow the progression. But that's just natural, and it's okay. There's opportunities in it for sure.
I mean, like the one thing that is interesting about this banking stuff, so I've done a bit of banking, right, in my career. Like I could see some of the bigger banks probably getting away from this, but smaller banks, may have problems because the regulators are probably going to come down on them hard. I can't imagine bankers are like thrilled to be doing crypto right now with everything that's going on in the world. Some of it has obviously like nothing to do with crypto, right? But it's just like, I'm sure it's always a hot dot when they talk to the regulators, even in normal times, right? Like, what are you doing with crypto? How are you doing anti-money laundering? How are you make sure that these places are doing KYC the right way? Like all of that, so, and now there's heightened scrutiny around, it could be hot money. Could get pulled out fast too, right?
Right.
It's very interesting. It's a very interesting dynamic, right? I have to imagine the bigger firms can probably navigate it, right? But maybe some of the smaller banks might step back.
Right, and I think that's the setback for everyone else that's tier 2, tier 3, and beyond, because think about it as a proportion of Bank of New York's custody. It's tiny, right?
Yeah.
So their risk is low. But now all of a sudden, it's just another arrow in their quiver to be able to service another sector.
Right,
so
right.
they look great. It's such a very clear win in my mind for the big players.
Well, I have to imagine too that these big players would probably only want to deal with other big players in the crypto space, right? So to your point around consolidation, like I don't know if you're a fintech startup, doing crypto work, if you're going to be able to do business with Bank of New York Mellon, because they'll probably be obsessing over your, controls, KYC, AML, and the like, type controls. So, man, I don't know. I think it's like a new day out there.
Think about it. Counterparty risk. Like counterparty risk has made a big splash recently.
It's like back to basics,
Right.
It's like back to basics. But, I mean, I don't know. I suppose as long as there's a U.S. dollar around, you're going to need a way back from crypto into fiat, and you got to have a bank to do that. So it'll be interesting to see how this evolves. But it's like a new day out there with this stuff,
Right. But actually, that last point is pretty crucial as well. So when you're moving from your fiat to your dollar and back, the bridges are effectively what's always getting attacked, right? That's the dangerous part. So now everyone's kind of open and exposed now more than ever, because every time they want to move currency type, that's when their pants are down. So I mean, so much is going on. I'd be highly surprised if we don't have a myriad of attacks that crop up that we find out about in a month's time. So
that's a fair point.
I hope that's not the case. Absolutely,
very likely.
Yeah. All right, let's talk TikTok, boys. So okay, there it is. So TikTok.
Oh, I thought you were going to cue up music for us, and we had to dance again.
Listen, man, with TikTok, I could have done a dance or something, right?
Yeah.
Like break it out.
We all do the point. Yeah, for this one, point to the bullets that you're going to bring up.
That's
1,
right.
2, 3, 4.
Nick, I don't know. I'm not really on TikTok, buddy. It sounds like maybe I should get on and follow you. You got some skills, right?
I've never used it, but it's
I like that. So, listen, the CEO of TikTok, this is the TikTok CEO. So, of course, ByteDance owns TikTok, right? TikTok's a subsidiary, is testified this morning. I don't know if you guys watched it, right? But the poor guy got just destroyed. He didn't have a chance. But the Biden administration's asked ByteDance to divest of TikTok. Chinese government came out this morning, obviously perfect timing with the guy testifying in front of Congress. It says they're gonna have to approve of any kind of divestiture, and they don't want that to happen. TikTok influencers are showing up to protest in DC. So
oh my God.
My big question is this actually going to happen, right? ByteDance is up, okay, this year. They just did a round. So ByteDance just did a round in March at $220 billion, right? They did $62 billion in revenue. We talked about these guys a couple weeks ago about how ridiculously low that revenue multiple is, right? But big shop. TikTok is a part of that revenue. It's certainly not all of it, right? And so and the last probably point I make before I'll let you guys respond is that there was this big to-do about over probably the last 2 years about Chinese stocks getting delisted from the U.S. stock exchange. And there was a period of time where it was like a done deal. I think you could ask anybody, they're like, oh yeah, that's definitely happening, right? And then all of a sudden, magically, it doesn't happen, right? So I'm wondering if this is the same process that we're going through. It's a lot of political rhetoric, a lot of hot air, and then ultimately it's a big nothing burger. Nothing happens, right? Everything just continues on the way that it is. So what do you guys think? TikTok and the ban.
I mean, I think I'll let Nick, get into some of this, but I think some of the states are serious about this, and I think that's forcing the federal government's hand to really. I think they are
Oh,
considering
interesting.
it seriously, but I also think there's a tremendous amount of theater in all of this, and so
Right.
Massive.
and if you think,
So you're talking, hold on. So Clint, you're talking banning it. This is the first I've heard this. So I'm like, now I'm really interested. It's like you're talking like state of Texas says
cannot,
no TikTok.
especially for like government
Oh,
officials, people
interesting.
working for the government, it's like, look, you can't use TikTok. Um,
Okay, that I understand. I just, the act of like not allowing it to happen in a state is fascinating to me because I guess you'd have to get like the cell provider,
Well, you start to first
the
just
ISP
yeah, you
provider
start
to
to
do
just
it.
prevent people from being able to have it as an application on your phone, right? But they start first. It's a slippery slope. Once you start banning it from government officials, people working in the legislature at a state level, it's only a matter of time before it starts
Right.
creeping down because they consider it a real danger, right? Data piracy or whatever it
Mm,
is that they're really concerned with. And so I think these are legitimate. There is legitimate concern out there by
right.
a, a big percentage of folks within the U.S. and Congress is going to have to grandstand and put a little acting show on to make sure that they're showing their voters that they're serious about TikTok. I think there's more important things to worry about, but nevertheless, I think it's getting a lot of views for these
Press.
politicians, and so
Right.
it's important for them to make
Yeah.
a stand, especially in the year prior to an election year, where
Yeah.
these issues tend to become magnified more than they should be, in my opinion. But
Yeah.
hopefully, it is a big nothing burger. I mean, at the end of the day, I very seldom like when, actually, I never like when the government starts to infringe upon, private business.
Private
Yeah.
business. Yeah.
Well,
Yeah. Yeah.
it's infringing on freedom of speech in some regards. So it's almost incredibly ironic, where we as a government will mock the lack of freedom of speech in China, whereas now we're saying, well, we're not going to give you freedom of speech on TikTok because it's Chinese domestically in the U.S.
Yeah.
So, or maybe the government starts advocating for more Instagram or
Right. Right.
or
Well,
moving
you know the
people over
lobbyists are
to.
in there, Nick, right? You know
Oh, the lobbyists are.
meta lobbyists are there, right? Come on.
Yeah, because I
They're
mean,
all in there.
what are the
No, but
users again?
my
Name
running
the user. Like you quoted the users the last time. There's massive amount of users on it. It's
150 million in the US. The CEO's been talking about 150 million people use TikTok in the US.
and what's their
5
global
million
user
small
base?
businesses. Oh, that I don't know, but it's multiples of that, right?
Yeah, of
It's
course.
huge,
It's just
right?
unbelievable. Like, come on,
Yeah.
man. You tell 150
Yeah.
million
My
people.
my running my running joke today, guys, has been after watching about 15 minutes of the testimony. I couldn't stand it because it was just like, to your point, Clint. It was just every politician coming up there and like saying their piece about it so they could get. So I was like, oh, I was texting a buddy. I'm like, yeah, they're just they got to say their piece so they can get their media soundbite to like wait for it, post it on TikTok.
Right.
Exactly. Exactly.
Right? It's very funny.
It is funny.
But I'm not sure how this is going to play out. I got a feeling there's going to be a lot of talk about this, and then the solution that TikTok has with Oracle. So they're basically, I don't know if you've seen this, but the TikTok folks have been working with Oracle to both store the data, but they are also setting it up where they would submit the app to Oracle developers to review for security purposes before it gets submitted to the Apple App Store or the Google App Store. So like, it's kind of wild. The other thing I didn't fully appreciate after listening to the opening remarks from the CEO of TikTok today is ByteDance has a board of five people, board of directors, and 3 of them are Americans, right? So it's just like, I got to tell you, man, I think ByteDance and TikTok are doing a very nice job of like managing this, in my opinion. It's just like an uphill
How
battle.
did this get so out of hand, though? Like, why was there such an initial outrage? I mean, that's okay, let's consider the possibility that the data was being delivered to China and the Chinese government.
Yeah.
Walk me through why that is such an outrage.
Yeah,
I mean,
I have no idea.
Facebook stores all your data.
I,
I
yeah,
mean,
and I'm sure the
Google
Chinese
stores
have
your
that too.
I mean,
Right? I mean, that's the coup. It's like, I mean, I'm sure the Chinese have every single social media's access to their databases. I mean, it's a global power. I mean, they have just as good technologists as we do. I'm sure they have access to everybody's stuff,
I
right?
think it's
So,
a very important military, military,
right,
policy
right.
to make sure
Yeah,
that you get data.
yes. Yeah, I mean, but look, I've been in involved around China for a long time, right? This ETF company that did China. It just seems like if you look at just every year, every 18 months, there's like another political thing that pops up, right? But meanwhile, the two countries continue to do more and more business together,
I know,
right?
which is
So
staggering. Last year it's like
it's
wasn't it the biggest year on record of trade between China and the U.S.
I I believe it was, yeah.
And
So
like
I
if
mean,
you
like I
listen
don't
to the media,
understand
you'd
it.
think we're at war with them.
I know. That's why I don't understand. Like on an individual level, I guess American and Chinese people have no problem doing work together. But on a government level, we just got to bash each other, for, every 18 months with some new topic. 18 months ago, it was delisting Chinese company stocks,
Yep.
right?
Yep.
Today it's TikTok and it's divesting. So I don't know. And it's going to be, it'll be interesting.
What's
to see play out.
politics?
So what else?
What's politics all about though? It's blame avoidance, right? That's all
Yeah.
it is. It's blame
Yeah.
avoidance. Got to have a scapegoat. So
You do.
So-
You
so
do. Well, Chinese easy target.
Yeah. So how much of this do you think was seen in 2022, so the last 12 months, from insiders or holders of ByteDance? From you guys, what are your thoughts? I've got some objective data here. Would love to splash out. But do you think that ByteDance, it's always in like the top 10 of all most active companies? It's number 3 currently in the last quarter.
Oh, that's
And
interesting.
do you think it's more oversold or overbid? Or
I
do you
would
think that stacks
say
up in the top 10?
I would go with what might be perceived as the contrarian view and say it's overbid.
Okay, Clint.
I mean, I got to go contrarian too, but that's-
Contrarian
We're both
to
contrarians. Clint and I are contrarians in all things
to
in life.
AG or to your thoughts.
no, meaning I'm contrarian not to Aaron, contrarian to what most people would think is that people have been selling it. So I'm thinking they're buying
Right
too.
on. Okay, so we had 88% offer interest above bid. So this is in excess of $5 billion that we're seeing here. So it's the second most oversold name that we have in our top 10.
Really?
Only second to Revolut, which is interesting because we talk about that one all the time and we all kind of love it. So very interesting.
That is
when
interesting.
we're
That's
seeing
fascinating.
that sort of volume backing that up. But
Well, look, they cleared out this primary round in March like no problem. So, I mean, the thing's a steal. A 3x revenue, I think the thing's a steal.
I mean, it's trading like a dental practice at 3x revenue. Not a
It's wild.
not a disruptive
it's-
technology company, an education platform.
not yet.
Sheehan's the same way. Sheehan's the same. Right, that we talked about them. I think last week or the week before. It's
Correct.
Same thing. It's like 3-4x revenue. It's just I don't know what it is.
I think we've hit the nail on the head. A significant amount of that is just all politically driven, right? If this was a U.S. based company, there's no way it's trading at 3x.
I gotta ask you though.
European companies, we see the multiples so different, right?
Yes.
So
I got to ask you that this is a company that is, if it were public on the New York Stock Exchange, I actually think ByteDance would have a higher revenue multiple than this, right? Where like if a SpaceX went public on the New York Stock Exchange at a 30x revenue multiple, I don't know if it would be 30x. Maybe it would, right? Maybe higher. But like, that's a high multiple versus a 3x multiple for ByteDance.
3x is like
right?
the S&P 500,
Yeah, but
right? The S&P 500 at its peak in 2021 got a little north of 3, right? So you're trading slightly below 3 times revenue at the moment. Maybe it's like 2.5.
yeah, so it would have to with the growth on it. It would have to,
Have to.
right?
I would think
Yeah.
like this is one like this company and Sheehan, I think should go public. I mean, I don't know why they're not at this kind of multiple. I also think that a lot of this rhetoric would probably go away, right? If these companies went public on like a New York Stock Exchange, because you're gonna have so many U.S. shareholders owning it then, and they'll have so much capital gain, I anticipate, right, in their portfolio. It's really quite fascinating.
And more transparency.
All right, boys. What else? Yeah, right, exactly. Because you'll be, SEC be monitoring these guys, right? But okay, what else? Anything else on your guys' mind this week? Usually I try to avoid AI now because Don rolls his eyes every time I bring up AI or SpaceX. So I try to avoid that, but he's not on. So I don't know. Any good AI stories today?
AI. Yeah. So I did get an invite from Google, and I'm sure you guys got the same.
Bard?
To go for Bard.
Are you doing it?
No, I haven't tested it yet. We've been kind of using the Microsoft competition. But
okay.
Yeah, no, I'm curious about it. So I haven't endeavored, so I can't give comment. But I think quite a few of my friends also got those invites. So
okay.
I think they're really trying to get after it. They think they figured it out.
Are you using AI yet in your business, Nick? Are you using it for any operational stuff or anything like writing code or anything like that?
Not writing code, but we are using it to garner some research. So nothing that goes into the creation of data externally or anything like that. I don't think we're trusting it yet. That's all done differently. But
sure.
But yeah, we're now using it readily.
No, I mean as a data company, that I understand.
Yeah.
Yeah. Keep it pure, right? Keep it old school for the time being.
We have our.
What about you, Clint? You doing anything with AI yet?
I use it all the time. I use ChatGPT all the time, man. And
do you really?
Yeah, and I'm fascinated by how quickly it's beating out most service industries from an intellectual service industry. Think about accounting, right? So it already answers tax questions with 95% accuracy, already passes the bar. You start to think about financial planning for people underneath a certain complexity level. I mean, man, for my industry, helping, developing chatbots, figuring out ways to really streamline customer service from a financial information perspective. I mean, that's a pretty clean use case. So yeah, I use it all the time, pretty much every day. I'm really interested in one fact I read earlier.
Are you using
just for research?
Are you using ChatGPT? No, but are you using the ChatGPT? You go to OpenAI.com and use it there, or are you going through Microsoft Bing?
No, so I'm using it through